Check, please.
Hey, welcome back to Everything Money. In this video, we're going to talk about Apple. We're going to give you an update on our thoughts on the stock and the company. We'll show you their numbers, their financials, and what you could be paying for this company using our stock analyzer tool. We'll show you Mo trading this company if you're interested in day trading, swing trading, momentum trading, all and more. All in this video. I love Apple. You love Apple. So does Paul Mo. Paul, give it to me. What do you think about Apple, baby?
So I had lunch with my good friend Michael Moskowitz yesterday.
Sounds like you're eating right now. Keep going.
And, well, you made great beef jerky.
Beef jerky, I know.
Seth makes his own beef jerky at home. It's phenomenal. So I was talking to Michael Moskowitz about my QQQ short, my short on the NASDAQ. And I said, the question becomes, when do I exit? And he had a great comment. He said, Paul, Apple is the bellwether for tech.
Bellwether?
Everyone loves Apple. Apple's like, hey, I'm tried and true with Apple.
Sure.
I'm sticking with Apple. He goes, when people start giving up on Apple, that's when you know we're close to the end. He goes, it'll probably be one of the last stocks everybody gives up on. One of the last ones. So anyways, Apple has had amazing growth. It's an amazing company. Innovation, high return on invested capital, everything you could possibly ask for a company, they have it. Buffett loves it. Buffett owns it. He's made $150 billion off it. More power, or something obscene like that. More power to the guy. Mo and Seth here love Apple. We have another friend who hates Apple because of the battery issues.
The battery issues.
He lives and dies by his battery issue. I don't know what it is. But anyways, let's go take a look at Apple using our 8-pillar software.
It's really hard to find chargers these days.
I know.
Yes, it is.
They're going to have air chargers soon. So guys, this is our software. Those of you who know, we have a new feature now, constantly updating real-time stock price. Look at these prices change. It's exciting. So this is Apple. It's a $2.6 trillion company. It actually hit $3 trillion at one point. The big 3.0000 whatever. Mm-hmm. Now, for Apple, the biggest thing that I think Buffett loves is this high return on invested capital and 32%. So much. Yeah, and so much free cash flow that at some point they're just not going to be able to do anything besides buy back their shares. So I think his thought process is, listen, this is a company that's being immersed in everybody's lives, and they're going to buy back shares. And even though I own 5% today, maybe in the future I own 8% by doing nothing but waiting. And if they can keep increasing their free cash flow, your ownership's going up, free cash flow is going up, it's incredible, right? So let's go to the 8 pillars tab here real quick. Now, guys, if you know our 8 pillars, watch our videos. These are our 8 pillars. We love this metric, these 2 metrics being X's. What it means is the company looks awesome. It's just overvalued according to this. Now, does it actually mean it's overvalued, Seth?
You're going to tell me no, because there's multiple ways to skin a cat, as you would say. But
not for that reason, but yes, go ahead.
This company always intrigues me because you guys have been asked before, like, what are your tried and true? This is going to be, but we still got to find the right valuation, you know?
Correct.
And so,
but
what's it cost?
But if Apple was going to grow 100% a year for the next 5 years, would you pay 36 times free cash flow?
Of course.
Of course you would. But Apple's not going to grow 100% a year for the next 5 years. So the question becomes, at what point, or what growth level do we need to justify these metrics? Now, we're going to use our stock analyzer tool next to input growth measures and see what it's worth. My guess is Apple's too big to really justify this kind of premium on the company. You might sit there and say, well, Warren Buffett loves it. Well, Warren Buffett bought it a long time ago at a much lower valuation. Now, did he overpay back then? Probably a little bit, but he saw high return on invested capital and a company that was immersed in people's lives. And in my opinion, if I'm Warren Buffett, I've got $150 billion laying around. I can go deploy 20 or 30 of that into a great company. That's a very rare feat for a guy like him.
Prior to going to Stock Analyzer, can you show me the revenue and profit of this thing? Because it's just colossal. It's just mind-blowing.
So, Sethi, we go to our income statement on our software. 10 years ago, they did $165 billion in revenue. Last year, $378. I would have thought 10 years ago, how are they going to grow from this to much higher levels? And they've over doubled in the last 10 years. That's incredible, guys. That's incredible for such a large company to do that. And guess what? Every single year, we get more and more immersed in Apple. I've canceled almost every subscription to focus on Apple, right? I don't even have a Mac computer.
Easier.
I actually prefer the desktop, the PC desktop and laptop. I do prefer that, but everything else I have is Apple. Everything else I have is Apple. It's just easier. Now, balance sheet. Look at this cash on hand. $153 billion of cash on hand, essentially. $153 billion. I just love it. Let's go back to the 8 pillars. They've bought back 21% of their shares in the last 5 years. They only have 2.2 times their free cash flow in debt. $48 billion more in free cash flow. High return on invested capital. Revenue, I mean, everything's great. The question you have to ask yourself is, do I think Apple will be around 10 years from now or not? If the answer is yes, do I think it'll be bigger, have more revenue, more profit, or less revenue and less profit? Okay, so let's go to our stock analyzer tool.
It's not what you buy, it's what you pay, Paul.
That is correct.
And so we got to be careful on this one, because you always say huge companies like this can't grow at 28, 30%. And sure enough, this one is, but we need to be conservative over the next decade.
No, it's not. If it doubled in the last 10 years, that's 7% a year.
Oh, I mean, the 1 year, yeah. That's what I'm saying. Look at the revenue growth on the stock analyzer. That's what I'm saying. Like
28. Oh, I'm sorry. You're right. Yes.
I'm trying not to use recency bias to say we're going to go 28% for the next 10, when in reality, we might be doing 6% or something.
Great.
In a down market.
100%.
Tell us about that software, Paul.
So guys, we created the software specifically. I remember we were doing a video, and our first video, somebody said, hey, how do I analyze a company without waiting for you to make a video on it? And I was like, oh, that's cool, but just watch us. Then all of a sudden, happened again.
Yeah, you kept on saying just buy wide charts at $300.
No, I did not say that. I said you have to, but watch our videos. And then all of a sudden it happened again. And again, before you know it, we're like, listen, people want the software, let's give it to them. So we invested multiple six figures, constantly every month, 6 figures to maintain the software. You get everything you see on this main page. 8 pillars, retirement calculator, stock analyzer tool, 8-pillar portfolio, exclusive video content. Every day we release video to those in our community on the phone and on our website, and the watch list and everything else you see below that we're going to add to the software. Right here, you're going to get all of this as part of the software. But the biggest thing here, guys, is our EM community chat. This is in our website and on our phone exclusively. It is 6,000 people talking about investments every day. Guys, it's hard to do research on companies. What this allows you to do is go into the chat and talk to like-minded investors, because I'm sure you don't have them around you, to discuss your ideas. They bounce things off of each other. I use this for my ideas. I use this for asking people what they see in a company. I even use it. It's all available, all of this on your phone for $1 per day. That's it. If you can increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, this will lead to hundreds of thousands, if not millions of dollars extra in your retirement, depending on how long you have to go. This is all available for $1 per day. Less than a cup of coffee. 2 ways to sign up, everythingmoney.com or Patreon for our international users. The benefit of everythingmoney.com is you don't pay sales tax yet because we're not big enough. And the benefit is also you get billed 1 time per month on your recurring day. Guys, sign up, because every month that goes by, we raise the price. But for new users, whatever price you lock in at, that is your price. All right, so this is the stock analyzer tool. It automatically puts 10 years of analysis in here, but you can change it between 1 and 20. Now, guys, revenue growth in the last 10 years was 9.7% a year. I'm going to go way more conservative. Now, you might sit there and say, Paul, you're being too conservative. Our goal is to be conservative and buy companies that are still selling for less than that price. Okay, so I'm going to go 4, 6, and 8% revenue growth in the next 10 years. I even think, I'm going to go 3, 5, and 7.
Jeez,
I think 8%. Yeah, it is low. Profit margin. Profit margin in the last 10 years is 22.8%. I'm going to go 20, 21.5, and 23. Free cash flow, I'm going to do 22, 23, and 24. PE, 13, 15, 17. And guys, the reason being is the bigger the company, the less the growth, the lower the PE. Because I would sit there and say the more growth potential, the higher the PE. So I can't go the exact opposite way and not say that the PE should be lower. You should pay a higher PE if the growth potential is huge, or if there's some moat. And there is a big moat here for Apple. If I give you $1 trillion, say, and say replace Apple, you're not doing it with $1 trillion. It's going to be very difficult. So there's a huge moat here that Warren Buffett loves, right? Okay. I always put 12.5% desired return. Why? Because you can get 9 or 10% from an ETF. So to get your margin of safety and to give yourself a reason to buy an individual stock, do 12.5.
This is going to get ugly, Paul, these numbers.
It will be. Hit the analyze button. Now, guys, in the past, I've said 120 on Apple. This middle number is 71. Now, you might sit there and say, Paul, what's the difference between 120 and 71? This is insane. You're right. It is insane.
What's a high?
High is 95, 100. But remember, guys, I change my assessments all the time based on how I'm looking, feel, all that stuff. Now, let's go change these revenue growth numbers. I'm sure I did something like 6, 8, and 10% revenue growth or something crazy like that. You're at 120. But I do think there's a premium to be paid for Apple because of their buybacks and their high return on invested capital. I am okay starting a position at 120 on Apple and dollar cost averaging down. That's my personal opinion, because I think the buybacks with their cash flow will end up leading to a much higher ownership stake for me. And for a company of this magnitude, with this moat, I think it's a wonderful thing. And they're going to be spinning off a lot of cash flow.
Would you put in for profit margin? I just can't see it from here.
I put profit margin of 20, 21.5, and 23. And I went conservative in all these things.
Yeah, that's conservative.
Right? Mm-hmm. So, again, it always changes, but the bottom line is the main goal of Stock Analyzer Tool here is see where we stand. Now, here's the great news, guys. See these check marks, these plus marks here? You can add this to your watch list now. You can literally sit there and hit the plus mark here, and it adds Apple at 71.4 to go below that and notify me. I just added it to my watch list.
It alerts you?
It'll alert you through email on our software to say, Apple just hit your price, go take it. And on your app, because this is all available on your app.
If you're intrigued by day trading this company or long-term swing trading, you can join Mo, the fearless leader of the Bid-Ask Nation. Mo, what's going on with Apple over there?
So Apple is one of my favorite. This is a long-term chart. Apple is one of my favorite stocks to go long on, both long and short, because you probably think you can't go short on Apple. Yeah, we can, because we can see that the stochastic is turning down, and we just followed this trend down. And I am waiting right now. This is a part of the Employed Trader series. It's 6 stocks that I go through and trade every single day, and I give you updates on what I'm personally doing in them. As soon as Apple takes out this low right here with an engulfing candlestick, I'm going to be looking to short this thing. In my value portfolio, I'm also long on this. So it just shows you that you could do different things. We caught this entire run with Apple right here. We caught a little bit of a run with it here. So come and join and see what I'm doing. You could see my trades that I'm making in the Bid-Ask Nation. Now, this is another great stock to day trade, because it has constant fluctuation every day. It looks like yesterday you could have gone short on it. This afternoon you could have gone long on it. Is this something you guys caught this afternoon, or was that too late?
I did not.
Nothing. I caught nothing this afternoon.
I caught losses this afternoon. Over 80%, good volume coming in, good engulfing candlesticks, and you could have made a lot of money this afternoon. But you see that right after that talk that Tim Cook did, revealing all the new products, stock price is coming down. There might be a chance for you to get a short on it this afternoon, so you can go long and short in the same day. The Bid and Ask is the place to be. Come and join us.
So, Paul, in the end, say I just love everything about Apple, and I'm just going to buy it today. That's my process.
I mean, that's fine, but you're going to have, remember, every investment's a present value future cash flow, and the more you pay, you're stuck at that price. Once you've paid a price for a stock, that's your price. You might sit there and say, well, I can sell it and buy it at $1 point. Yeah, but it's probably already fallen at that point. Me, I keep going back and forth on price. All I know is I'm not willing to pay the price it's at right now. When it falls below 120 on my watch list, I have set it for 120. That way I can go do a reassessment and see if things have gotten better. And like, okay, do I really want this company at 120? That's it.
Found with a thumbs up. Subscribe. We'll see you next video. Thanks for watching.